as we watch the sellout that's happening today, my guest for the hour continues to say that the markets are going to actually continue to perform, and there are plenty of ways to make money in this market. Jim Frischling is co-founder, president at NewOak Capital. You know, this pullback really isn't spooking you, Jim. You say that we're okay right now. You like what you're seeing. Why?
I mean, overall, yes. And we've been talking for the last couple even weeks about a natural pullback. The expectation there would be some pullback, but it would be fairly, overall, we were expecting to be short-lived. Yesterday, we saw buyers come in really on back of what was being talked about as better than expected, surprise to the upside in terms of China's GDP. And obviously, that's not what we saw this morning or overnight. And also, I think the backdrop to the Fed remains still constructive. So with New York Fed president talking about there being room for more stimulus, and then you see CPI, the Consumer Price Index, come out and shows that inflation really isn't as threatening. The Fed has come out blatantly saying that inflation concerns are not their number one issue, but actually growth and job creation are their concerns. So with the idea that stimulus is still on the table, a commitment to low interest rates, which is still on the table. So yes, we do understand there'll be some give back. Certainly some sectors have performed incredibly well. The bank sector, for example, has been a big performer all year, giving back a little bit. Again, we still are constructive on the market, in part just given the support that the Fed is still standing by.
A lot of talk, though, Jim, this week about the old adage, and frankly, if you look at history, it does make sense that you want to sell and may go away, come back in the month of October. I mean, the 6-month lag over history, particular for last year, the S&P took a massive hit in that time frame. But you don't really kind of subscribe to that, excuse me. You kind of say that basically either stay in or cherry pick in stocks, but you're not telling your clients to sell.
We did talk about the sell in May and go away and how the strategy actually had worked for the last 2 years, and that the pullback the last 2 years during this period, particularly from May even into early fall, had been fairly dramatic. So while we were thinking that a correction of maybe 5+% could be part of this, we weren't expecting to see the same type of give back. Therefore, it was either stay the course, choose your names wisely, good businesses, moats around their businesses, good global distribution channels. I mean, all very fundamental stuff. But the fact is, we weren't expecting a big give back.
And the China GDP, because I remember you were looking for. You didn't think this was going to be that bad of a number coming out of China. You still don't think it's that bad of a number, even though you've got the Dow down 78%.
You know, and it's certainly a reason today that the number disappointed to give back. However, the idea that the number was, let's say, slightly weaker than expected, but still shows maybe I'll put a positive spin on this. Maybe this is the right move. This is a sign of a more sustainable growth for China, as opposed to, let's say, as dramatic as people had expected to be. But again, I'm going to try to put a positive spin that it's only a little give back.
All right, Jim, you just stick with that positive spin. You stay with that. You stay with that. And honestly, I mean, in this country, I think somebody made the point this meeting in our producers meeting that, in this country to have, growth of 8%, we would all love to have growth of 8% in the United States.
It's an enviable position.
Yeah, really. Wow, those poor Chinese. All right. It is time for the good, the bad, and the ugly. Joining me now, I got Phil Flynn in the CME Trading Pits, Ashley Webster up in the newsroom, Jim Frischling, NewOak Capital, back in the studio. All right, Phil, you've got the good today. The Saudis wanting to bring down oil prices.
Oh, you bet they do. And they're telling everybody in the world, hey, well, we don't know why prices are high. They're even saying we don't control oil prices. Everybody else thought they did. But the Saudis are very, very concerned, not only because oil prices are high, because they make a lot of money, but basically they're concerned of what it may do to the global economy. But there's another reason why the Saudis want oil prices to come back down. They, like the rest of the world, want to put more pressure on Iran. They're not very friendly with Iran right now. And they would like to see these prices come down to make sure that Iran is a little bit more forthcoming at these meetings over the weekend.
And if you're shorting crude, it would be good for you, obviously, if you're trading that in the pits of the CME. All right, Ashley, I've got you with the bad today. Barnes & Noble, the stock continuing to sink. Even after they came out with that product last night, that new e-reader, it's not helping them?
Well, you know what? Let's be honest. Barnes & Noble taking the brunt of that antitrust settlement between the government and the 3 major book publishers, because ultimately Barnes & Noble will have to drop the price of its e-book titles to compete with Amazon. The stock dropping some 6% this week, 17% this month. And it's worrying because Barnes & Noble really has kind of pinned its future to the digital book market. Now, yes, they brought out this new Nook e-reader that, wait for it, hang on, glows in the dark. I don't know. I feel like that's really. It actually lights up at night, it says. It's the Simple Touch, Nook Simple Touch. It's going to retail for $139. They say it's the biggest revolution in this market since the release of the Kindle back in 2007. And as I say, it's going to retail for $139. Will be available next month. Apparently, it doesn't light up at night as the model that's out there right now. So it seems to me, with all this technology, saying that we've got something that lights up at night seems a bit of a, really?
Well,
but there you go.
Okay, but just on the other side of that, though, I have to say, like, if you like to get, if you go to sleep at night with a book in your hand, you can get into bed with the light on. I'm just saying.
That's true too. Yeah, you can. Or you don't have to wake up your partner. You know, someone in bed with you can turn the light off, the bedside light, and. But whatever. I don't think it's a game changer. It doesn't seem like that to me.
Well, obviously the stock isn't reacting. There you go. All right, Jim Frischling, you've got the ugly. You're underweighting the home builders, but it's interesting. You say it's the low to the mid-tier home builders that you're underweighting. That's your ugly.
This is really a supply-side story. First-time foreclosure rates have spiked and hit a 6-month high. We're actually expecting a surge in repossessed properties. Let's remember, there was kind of a moratorium on foreclosures as a result of the legal issues the banks were facing and the whole robo-signing issues. But most of that got put away with the $25 billion settlement, and the banks are taking action. So expect the banks to be aggressive. Expect these foreclosed properties to be sold into the market. They typically sell at deep discounts. So we actually think with this flood of properties coming, the home builders and the need to build new construction is going to be less in demand. So they've had a great run.
So KB Homes stock up 91% over the last year. You're saying great run. DR Horton, same thing, but you're saying time to go.
Time to pull back on it, particularly because KB does focus on affordable home buildings. They've had a great run, but now I'm expecting a pretty big supply of affordable homes to hit the market.
Interesting. Okay, well, if there's buyers out there for all of that, that would be nice to have. Yeah. All right, Ashley, really quick to you on this one, home builders. Heck of a run for the sector.
Yeah, it really has, but it's absolutely right. Banks are getting so aggressive now because they've gotten this big settlement back in February. They're starting to really push these properties through the pipeline, and we are going to see a flood, as we talked about yesterday, a flood of these foreclosed properties hitting the market.
All right, guys. Well, thank you very much. Great discussion today. Coming up, everybody.